Well, good afternoon, Maverick traders. Joe with you here on a market roundup. It's Wednesday, the 29th of January. Kind of winding down the first month of 2025, and it's actually been pretty exciting, especially the last few days. I've got my 2 cents. You guys know how this works. Takes responsibility for the outcome of whatever you follow along with. Let's get into the meaningful news of the day. Let's take a look at these markets technically, and I've got some trades to share with the community as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, let's just go ahead and jump straight into it. Slightly lower across pretty much everything. Dow, the S&P, the Q's down about 0.5% there. The Russell's down about 0.22. Oil slid about over just a little bit over 1%, and gold was pretty much flat. So overall, it just down a little bit. It wasn't too aggressive of a down day, but it was a lot lower than that before the Fed announcement. Let's take a look at the daily news. No changes in the rates as the Fed sees a small uptick in price, meaning a little bit more of inflation, but not a lot, and a stable labor market. So the idea of not making a move here is because we do have this Goldilocks kind of economy, this soft landing going on. Now, this was unanimous across the whole board. Now, overall, folks, we were down quite a bit after a pretty substantial bounce back yesterday, but climbed back up to retrace the majority of the losses right after the Fed came out and said that. Now, we still have earnings out there as we continue forward, so we'll see how things kind of play itself out. Real quick, let's take a look at the advanced decline line, 58% declining, 37% advancing. This was an overall sell-off, understand, but the recovery that we had about midday really kind of curbed some of those, some of the larger losses. Above below the moving average 50-50, there is selectivity when it comes to what reacted to DeepSeek and the subsequent bounce. So a little bit of fear there. I got a VIX chart I'm going to show you here in a second. So we'll see how that plays out over the rest of the week. So this is the overall motion of the ocean. Corey made mention of this, saying, look, here's the reaction to an announcement or a piece of news event that really kind of shook the majority of what traders have been following. So I don't think it's collapsing. I just think a little bit of a reaction or some fear. Nice subsequent bounce to continue to push right back up here. And then this inside day. Let me go ahead and erase this, folks, because I want you to kind of focus on this shadow today. So we were a lot lower, about half of this we retraced when the Fed came out. Now overall, it's bullish. I mean, it's a gap down, but we're still above averages. The averages are flip-flopped. Decent little volume there on the S&P. The big one to focus on is going to be the Qs, and so let's just move to that. The Qs. It feels a little bit more ominous, and the reason being is because it is kind of the target of what the reaction happened with. Now, it doesn't have quite that 2050 crossover that the S&P does, but it does have substantially larger volume, and it did struggle with this. So these are flattening. The gap lower, it wants to get back above those averages, and it did. It recovered the majority of today's move, but it just has a little bit more to go than the SPY. Another thing to kind of correlate with this, folks, is what has the industrial average done, the INDU? We had a pretty good, or I should say, a really aggressive reaction to that DeepSeek. Everybody just flooded out of tech, but that Dow, it just shot up. It's back up to all-time highs. Let's move over to our heat map and show you, hey, this is still kind of going on. We're still seeing some weakness in some of these stocks. Microsoft, Nvidia again, Tesla here, sliding a little bit lower. So where you see it is kind of these, the ones that are directly talking about AI. AI is their business. Where they want to go is AI, things of that nature. Doesn't mean they're going to fall apart. It's just we're seeing a little bit of move out of that and then back into safety. We're seeing it going into some of these industrial areas. Take a look at GE here. Some of the utilities, some of the defensive stocks, all sorts of different things. So we'll see how long that plays itself out. Now, this is kind of the reaction that I saw, and I wanted to show you. This is the VIX chart, and you could see this little span here. So we get this impact and this reaction to whatever it is, whether it's the fear of China or if it's something that we can't really compete with or blah, whatever it is, it created some sort of reaction. Now this spike got up to about, was that 20, just about shy of 23, and then immediately played itself out. And it's been kind of coming back since. So this, to me, is something that was going to happen regardless. They just, we just needed an excuse to see maybe some of this scalping. I refer to it as harvesting of some of these larger companies, especially at the beginning of the year. I really can't say that, hey, it's the end of the sector itself or where it's going to go, but just understand that this corrected itself pretty quick in comparison. So here's your move on the VIX when the Fed decided they might not be cutting interest rates as aggressively as they thought they needed to. So something very substantial, specific to the U.S., where over here it's just kind of a, oh, geez, what do we do now? So the overreaction can be just that. And so we actually have to play ourselves into, okay, well, what kind of chart pattern do we look at, or what should we expect moving forward? And that's where charting becomes very important. So let's just jump straight over to it. Now, I've got this as flat. And what's interesting is it creates a range. And Corey made a really good, Corey put this point out pretty solid, meaning, the chances of this thing staying sideways and choppy is a lot higher than jumping back up or falling apart. The reason being is because, we had a reaction. We've got a super strong market that has had really good success for a few years. And so you get some sort of exciting news or scary news or whatever you want to call it, and they gap down. Well, we got some profit taking that's going to happen. But to sustain itself within a range would make more sense than really falling apart, because of the stability of what the economy's at and where we are as a country. So based on where these earnings go and how we finish things off, I'm totally comfortable with kind of a zero, very choppy range-bound trading. My monthly outlook is definitely going to be at a +1 because of the fact that we are above both these averages, even though they're flip-flopped. I'm still glass half full, but choppy sideways, which is kind of funny because we're trying to find an equilibrium here between profit taking and a little bit of speculative trading and some fear. So we're not quite out of the January effect yet, if you want my total opinion. I do have a couple of trades out there, and it's very interesting to see. It's almost obvious. We got DoorDash, we got Foxa, we got in Mosaic. This one I thought was interesting because it's more of an emerging trade as a flight to safety in one of those industrials, right? The materials areas. Now, interesting on the bear side, it was interesting to see Cisco Food slipping a little bit and General Motors. So I'm just going to stay with what continues to get picked on and play that bearish. I don't think we're quite out of the woods yet when it comes to kind of trying to find that equilibrium here in the markets. So be selective, be shorter term, find your targets, and just move in and out when you can. Building the portfolio makes sense, but just make sure that you have it balanced out a little bit more of a shorter term, maybe week to week, more so than month to month if you're that type of trader. So let's just jump straight into our first trade. This is Mosaic. I like this as a bull. And you can see it is this emergence. So it's going down, it's fallen. We're getting a crossover here. It's all bearish. And then it decides to turn. It comes out, it has a gap, it moves higher, gets above its averages. And right around this area is where I'm kind of liking it. Then we get this crossover as it moves even higher and above this resistance area. So I'm not racing out to buy this immediately, but and I should have zoomed out a little bit further, folks, on this chart because up around this 29.25 area, 29.20, this is where I'd like to see it go sideways a little bit more, to tell you the truth, folks. And then kind of maybe a diagonalized play to an upside. You can snap a fib on that for a target, but I just like how it is becoming stronger. And maybe it's a flight to safety, maybe it's just a giant company. I don't know what it is, but I just like the price action. So let's go straight over to the bear side, and this is the exact same thing. I like the price action. Now, this is a little easier because, first, this is Cisco Corp, Cisco Foods. It missed its numbers, didn't do well, so it's already kind of beating itself down. Overblown, overzealous, and then boom, it's starting to slide. So I think, this has got to calm down a little bit. But once again, if you look in the past, you can find some areas where I believe this should kind of slide lower. I don't expect a gap down. I expect more something like this. Like, moves like this. Actually, boy, those are pretty steep now that I look at it. But something a little bit more, slowly moving its way down to maybe this 69 area over the next couple of weeks. So just some things to take a look at. Find strength, find weakness where it's at and why it's happening. Don't try to anticipate what's going to outperform or underperform, because we are truly just trying to find an equilibrium these markets have yet to find. And that's kind of where I'm going to leave it. I'm seeing a lot of, profits being taken, a lot of movement into defensive. It was pretty interesting, guys. If you take a look at when that news came out earlier this week with Deepak, I cannot believe the surge in the Dow. I mean, it's back up to all-time highs. It went up as fast as the Qs fell. So money's not coming out. It's just going somewhere else. And it could be fear. It could be greed. I don't care what it is. So wait for that balance to play itself out. We'll get something a little more clear. Earnings results should give us an insight. First, focus on the sector. That will give us our sentiment. Be patient with that and let sentiment show you where we should go. Fed sees strength in the economy, no change in rates. It was unanimous, and it just showed stability and strength in the U.S. economy. And I imagine that's why we recovered. Fear of what's going on overseas or fear of what policies could change or whatever's going to happen. The stability and strength of the U.S. economy is something you can fall back on regardless. And it looks like that kind of pulled us out of the majority of losses today. GDP, I'm not sure if it's a revision or a first time, but it's coming out tomorrow. Unemployment claims as well. And then we do have that PCE number on Friday. I think the Fed made mention of it in today's recap. So I imagine the PCE will be something, maybe we'll see a little bit of change. But actually, since the Fed has come out and said what they're going to do and where they're at, I think it'll probably fall onto earnings. Speaking of which, folks, take a look. We got a bunch. These are some of the bigger ones for the next couple of days. Microsoft, Meta, Tesla, and then tomorrow's Apple, Visa, MasterCard, Caterpillar, Comcast. There's a bunch I skipped over. I think Lam Research is in there. I think there's a few other larger ones outside of just tech. If you're not clear on where you should be, that's fine. Take a step back, take your time. I'm looking for something a little bit more clear before I start to really implement a portfolio. I do want my 10, 15 trades out there, but I'm going to put them on slow, maybe 2-3 at a time or 2-3 a week instead of maybe 5 or 6 or whatever I need because it's just a little muddled, a little murky out there for me. All right, folks, thanks for joining me. We'll talk to you next time. See you guys later.